let's talk about the mood of the market that seems to be extremely dull right now. At least in the index, no major cues to either resurrect it and take it higher to about 12,000 plus, or for that matter, any negative trigger points that pulls it down. So leaving the index aside, earnings season has been, surprise positive, probably more stocks in line, more companies in line with expectations rather than disappointing the street. Does that give you a little bit, of a positive cue with regards to the fact that no material downgrades have happened this quarter?
Good morning. I think they're all very interesting observations. Now, first, the market itself. I think the broader market has clearly headed higher for simple 2 or 3 reasons. We all know that the Nifty over the last couple of years, the move has been largely because of just about 10 stocks, which garnered nearly 70% of all flows. So which means 98-99% of the rest of the listed market did not see those flows. Now, you have 3 or 4 things have happened. One, a corporate tax cut has happened, which means that for all the companies, including the broader market, earnings revision upward of about 10% to 12% has happened. Second, capital infusion into PSU banks, clearly a positive for everybody, makes liquidity. There are steps to clear up the NBFC liquidity issues. And RBI is now looking at a supporting growth. Now, traditionally, the broader market, or rather the mid-cap companies, have higher cost of borrow. And simply because, smaller companies have lesser operating leverage. So when you have all these 3 or 4 factors with the corporate tax cut, then your valuations are supportive, and therefore I think the broader market is clear to go higher, and along with that, even the Nifty will move higher.
Chakri, morning. We're seeing a slew of important moves happening for the financials, right? The Supreme Court verdict on metals, and now with the telcos look set to raise tariffs, the fears of possible NPAs from this space will also dissipate a little bit. Do you think net positive for a space that has, well, not really gone up dramatically, but we've seen some gains already for the corporate-facing banks?
A couple of things. One is for corporate-facing banks, the Supreme Court verdict is clearly very favorable for the simple reason that, financial creditors are now, it sets a precedent for the rest of the cases which are down the pike. And against the backdrop, I think some amount of confidence will come back into lending. Now, that is very important for just about every sector. Now, if the IUC charges for the telecoms, they want to pass through because that's a charge imposed by the regulatory bodies. Now, that will translate into a fairly strong earnings upgrade, not an earnings upgrade, rather an EBITDA inflow for these really stressed telecom companies. So they'll probably get about a few thousand crores. That lowers the risk, the strain that they're under. So against this backdrop, and that's a fairly substantial, I think probably it'll go by about 4,000 crores each for Vodafone and Bharti if they do pass the IUC charges across.
Okay. But from an investor standpoint, Chakri, for someone who's already invested in a Bharti, the returns for the year have not been bad. It's at a 52-week high, 30% gained this year itself. Is there more headroom left for the prices to go up? And for somebody who wants to make a fresh entry and have an exposure to telecom, is this the right time?
Telecom was and is a trade, and it's not an investment. It's a positional trade, and these companies are still, after all this said and done, have debt levels which are at 5 times, 10 times their EBITDA. So not sustainable. There has to be a series of steps, and the market is expecting government will defer various repayments, AGRs, etc. Now, all that, if it does not happen, then there is clearly downside. And even if that happens, I think it's still a trade and not an investment.
All right, so while telecom still remains a trade and not an investment, would you say the same for metals? Because, things are changing even in the metals, the overall industry dynamics, the ecosystem may change once, and the competition dynamics may change once once ArcelorMittal comes in. So how does one position in the metals pocket now?
Now, metals, just now we've seen Tata Steel announce a product mix rejig as well as some employee layoffs, and I think that will improve its margins. These companies are trading at very low valuation. Jindal Steel and Power at extremely attractive valuations, and they've recently, the Sarda Mines is a positive. So if you look at company by company, these are companies which are trading at cyclical low valuations. And if any kind of an economic uptick, because of all the various reasons that we discussed about, will clearly help. If there's a pickup in auto demand, it helps steel companies and things like that. So from that perspective, there is still a investment case to be made for metal companies.
Chakri, but somebody who is investing into this space, should he or she be prepared for a slightly longer stage of consolidation stroke flat returns before the uptick happens? Because we can't really time when this economic activity uptick would happen and therefore the price uptick. The valuations are attractive, but the stock may still stay at these levels for God knows how long.
You're right. I think there are two or three pointers for any potential investor. A, these are cyclical companies. B, they're highly volatile investments. And C, you can make or lose a 10-15%, which is an annual return in a day. So these are not for everyday investors. They have a fair degree of high risk. But with all said and done, I think stocks, Jindal Steel and Power, Tata Steel, they look attractive for fairly substantial upside from current levels, provided you have the stomach for that kind of volatility.
Okay, some stocks which are doing well include a Delta Corp today, which is up about 7.5, Tata Elxsi 4.5, and some auto ancillaries. I mean, using Tata Elxsi as a pseudo example, but Mahindra CIE2 is up about 4.5%. So good gains for those select names as well in the session today. So do watch out for that. Chakri, the other stock in focus today is SBI Life. Now, there has been a block deal that has happened as a result of which the stock has corrected. Would you use large dips into some of these insurance businesses as opportunities to go out and buy them? Or would you be a bit circumspect considering the valuations at which some of these stocks might be trading at, SBI Life in particular, for example?
You're right in your observations in terms of the stocks have had a very strong run-up in year to date as well as over the last year or so. Yes, they do appear expensive. Now but they still have an extremely attractive long secular growth curve ahead of them. So for a long-term investor, I would look past the valuations, provided they're truly long-term, i.e. have an investment horizon 3 years plus. Then buying into the stocks, even at current levels, does look attractive because there's substantial returns to be made even from current levels.